China operates different to the democracies in the West. And the main difference is there's a blurred line between where the state ends and where private enterprise begins. But that line has got pretty big in recent times as internet companies in China have got bigger and bigger. And now I think the state is decided to rein them in.
It's not just companies, it's people. Look at Jack Ma of Alibaba. Starts one of the world's greatest companies, kind of mysteriously relinquishes the CEO role, then kind of mysteriously relinquishes all control, and kind of basically vanishes from the public eye. I mean, this is a multi-year crackdown by the Chinese government around Hong Kong, but also Guangzhou, Shenzhen, and some of the other technology capitals. What do you think the ultimate goal is, Cyrus?
I think the ultimate goal is for China to protect its national sovereignty. So recently, the U.S. said any foreign company listing on U.S. stock exchanges must submit to U.S. audit. If they don't comply with that U.S. audit within 3 years, they can be delisted. Now, the Chinese government clearly does not want to submit sovereignty because, prior to that rule, when the SEC tried to audit a U.S.-listed company based in China, Chinese laws said that they could not hand over that paper. So it's about sovereignty, but there are bigger issues at play. And of course, everybody knows China is vying to be a superpower alongside the U.S. or even in place of the U.S., and that requires tech supremacy, it requires military supremacy, and it requires control of trade and finance. And stock market listings are part of that.
Yeah, it certainly is. I mean, you got to remember, Didi goes public here in the States, and the Chinese government came out and said, hey, you should not have gone public. The stock fell, I think, 25 or 30% in one day as there was a huge crackdown on their data. Is there a situation, Cyrus, where China is the leader in this? Do you think actually other countries, continental Europe, may follow what they're doing? There's a lot of regulatory discussion over here, as you know, around antitrust. Maybe we're knocking China, but maybe they're just the first to do it. What do you think?
Yeah, I think in many ways there have been antitrust claims against tech companies in Europe for many years. The U.S. has just started to look at that. I don't think it'd be wise for either the U.S. or China to break up big tech because big tech has dual purpose for military and civilian purposes, and both countries need strong big companies, for this vying for power and superpower status.
Yeah, it truly is. What do you think it means for U.S. companies or U.K. companies trying to do business in China? It's already extremely difficult. They don't have Twitter. They don't have Google. They have pretty much almost in some ways their own internet. Is this kind of the final flag? It says, you know what, with the exception of a few things, you want to sell cars, that's fine. But you want to sell technology, probably not going to happen.
Yeah, I think there'll be lots of differences. First of all, I think we'll see the issue of the splinternet becoming a big thing in the sense that the internet will be regulated very differently in China to in other countries, and it'll be in accordance with China's national interest. And second, I think you'll see two economic zones. A China zone where with countries aligned to China stick together, and a U.S. zone where countries aligned to the U.S. Values stick together. And I think that will affect it. You've already seen it in the military with the U.S. and Japan doing joint maneuvers near Taiwan. You've already seen it in tech, where Chinese companies are prevented from buying U.S. companies, especially in the semiconductor space. And you're beginning to see it in world trade, where China is going to start launching its own digital currency. And that could mean replacing, the aim might be to replace the US dollar as the world reserve currency.
Shepard Smith here. Thanks for watching CNBC on YouTube.